Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Monday, the 5th of May, 2025, just after 6:30 p.m. Central Time. Well, the gold market certainly came alive today. Early in the morning, you were up 80-some-odd dollars. It carried some of the other metals with it, but not a tremendous amount of them. It tried to, and then things were starting to give up. The dollar finished about 20 points lower. You have a very mixed bag in many of the currencies. It's some up, some down. It's been a strange day, to say the least of it all. On the energy markets, they did get hit. You can see that you're at the $57 level in WTI, which is a number that's low enough now to really hurt future production. I don't think you're going to get a lot of new money thrown at producing. So you got to be careful of that. And in the Brent, you're down to the 60 level. As you know, over the weekend, I brought out the news that OPEC has decided to go to 411,000 barrels a day and threatens that if they can't get Kazakhstan, Iraq, and some of the other countries to join in and get back onto the quotas, not keep overproducing, then they're going to go up after June and start increasing each month till they get back to at least the 2.2 million barrels, if not more, and they'll be rewarded via President Trump taking his Mideast trip. Where's he going? He'll be talking to the Saudis, Qatar, and countries. The Saudis want more weapons. I am very sure they're going to get the ability to do it. It's interesting how the president is avoiding in the metals when I talk about this, not going to Israel, as Israel's called up thousands of reservists, and now they're going to occupy Gaza. That's what they've decided to do, parts of it. All right. So in the gold market, here you are up $18 off of that. We might as well take a look and see the events that we're going to get in the morning. You're going to get the March trade balance data. That's not a huge number in terms of market importance. They're looking at a deficit of $136 billion. Last month's was $122. I think it's a big number. It's another $10 billion. Redbook Group will come out with their weekly retail sales. This has been blowout. I mean, it's been over 6% for a while now on both the data numbers that they give us. That's very strong. API is going to release their weekly member stockpile data Tuesday afternoon. The first day of the FOMC meeting, remember Wednesdays when the meeting ends, we'll get the statement. We will get at that meeting also the press conference. No dot plots. They'll come into the June meeting, so keep that in the back of your mind. And of course, you're going to get an awful lot of reporting companies because that is what this is. We're in the earnings season. So as we take a look at the gold market, it is staying over the 18-week average of closes. That means I have bullish bias to it. The pattern here, well, if we take a look at that versus this, you're still looking pretty good on the weekly, and on the daily, you've been getting a heck of a bounce, a heck of a break. You had a big bounce today. I'll just show you where it finished, up $79. That's a pretty good number. You had gotten to 33.46. You closed $24 under that, but that's still very, very strong day in that market, any way you want to cut it. And now we're going through the highs that we made during the day. The pattern is still one of lower highs, lower lows. So the swing line is down. Where's the 18-day average? You tell me the battle you've been fighting 3 days in a row. One of the things that I teach is markets like to go back to that center line, that 18-day average, and decide from there what they're going to do. So what we have on a break was what I call a correction in a bull market coming down because the bias has stayed up. You've now got to prove you can get under these lows, the 3209.40, that you could have something else going on rather than just a correction in an overall bull market. The market had been running the upper Bollinger Band, corrected from that. And what I told you last week is now happening. The arms of the Bollinger Bands are wrapping the market, and that's because you've suddenly developed more of a sideways action than you had this action. This was the propeller that just took off from a low to a high. Now the market's, how do I put it? More subdued might be the word. The gold silver, well, you've popped back over. I should color this all gold because now the market is gone from what it did the other day, and I'll just show you this. This is how you were finishing. Silver was actually acting better. Well, today gold is acting stronger than silver, so this should be changed to gold, and you're back to that number. Now, Goldman Sachs wrote a report to their notes, is probably the better word, to their clients today, and it said they expect gold to continue to be stronger than silver. When we look at silver, I had pointed out to you last week that if the market pulled back, which is exactly what it's done, it would fight a battle between the 200-day average in gray, the green is the 100, and the red the 18. And you were bringing in all this to losing volatility in the market. It's exactly what has been occurring. The trend is down, but you're in support areas. If it can get out of them, then maybe you get to 31.52. Get back over 32.97 and you knock yourself out of the downtrend. In the copper market, I was wondering today what was going on and why this market was sticking its head up early on in the day. I mean, when I had done the morning videos, you were way up near this day's high at 476, and I'm going, is there something going on I don't know? Is that the canary in the mine? Well, as it turns out, it isn't at this point. In fact, if you take out the lows of today, Monday, on the Tuesday trade, you could get the pattern reestablishing to lower highs, lower lows, right back into the bearish trend. In platinum, you got under the 18-day average. You had that one move, and this is what I always talk about. You get into these main averages, it's rare that you just go through them and keep going. Often, more often than not, and I wish I could tell you how many times in my career I did that wrong. I'd say, oh, that's a breakout to the upside, it's gone. No, it generally can be a slight delay waiting for novices to say, that's it, I'm getting in. The first challenge is often a rough one. I give them time. I learned the hard way with that. Lower highs, lower lows. I'm in the bear camp on this until you take out the Friday high. And if the market breaks here, the 940 area could be your next support zone. In the dollar, do you agree that the market went back and just is sitting at that 18-day average trying to figure out what to do next? If you don't, what can I tell you? That is what it's doing. Now, I want to remind everybody that I have my report up on the website at iraepstein.com, and all you need to do is go up here and click it. I cover for you the S&P, the SPY. I give you price counts, what I think can happen this summer, the events that might make things happen. I give you pros, cons, every which way, seasonal studies. It's all right there. It's a pretty neat report. It'll be up through tomorrow. So why don't you go there and take advantage of it? iraepstein.com. There'll be an icon at the top up here as well. All you need to do is click it at any point. It'll take you to the link at the bottom, and you can give that a click as well. Have yourself a great evening, great trading day. Watch us in the other videos tonight, and I'll catch up with you on Monday morning.